Hey everyone, I'm Justin from the Ohio State Legal Services Association, and I'm here with Kathy Hoover, staff attorney for the Low Income Taxpayer Clinic at the Legal Aid Society of Columbus, and Melissa Skilleter, director of the LITC of Southeastern Ohio Legal Services. Today we're discussing the form W-4 and how to fill it in. Feel free to comment below and we'll answer whatever questions we can. To start us off, Kathy, what is a W-4?
Yeah, so W-4 form tells your employer how much federal tax you would like them to withhold from your paychecks each pay period. You can fill it out when you start a new job, have a change in your family status, or if you just want to make changes. This is an example of a blank form for 2022, but you can get a form for 2023 from either your employer or at irs.gov. You should carefully read the instructions and fill out all sections applicable to you. We'll go over some of the important areas of this form. So first is the beginning, step one, the personal information. So make sure you fill in this section completely, print clearly, and check the correct filing status for your personal situation. There's three different boxes you can choose from. You're either single or married filing separately. Married people can generally only file married filing jointly or married filing separately. You can occasionally file head of household if you lived apart from your spouse and supported a child. And then married couples, you will either file jointly or the qualifying widower. So step two, the multiple jobs or spouse worksheet. This is the most important section of the form. Failure to fill out correctly can cause you to owe taxes at the end of the year. This section may seem like there's nothing to do, so it's easy to overlook. Your employer will hold taxes based on your pay for this job only. If you have two jobs or a spouse that also works, then you use this section to let your employer know to withhold more taxes. There is a small checkbox here under C that needs checked if you are working more than one job at a time or have a spouse that works. It's very important if you check that box if you need to. And we're going to show you a few examples on why this box is so important. So for starters, there's a single person with just one job and no dependents. They make $11,000 a year. They did not check that box, but however, they only had the one job and no spouse. So with the standard deduction of $12,950, that took away all of their income, so they have no tax income. So they're due neither a balance or a refund for that year. If you're single and have two jobs that you work at the same time and that box is still not checked, they will withhold no money for your jobs. However, your standard deduction is still that $12,950, but now with income of $22,000, you're going to have taxable income of $9,050, which leads to a tax of $905. Since there is no tax withheld, you'll be responsible for making that payment when you file your taxes. However, if that box was checked with the same facts with one person working two of those jobs, with their taxable income of $9,050 and their tax of $905, they now have $936 of withholding, which means they will have a small balance due, or sorry, a small refund of $31. For a couple that is married filing jointly, where they each have one job and no dependents, if they would each make $11,000, their standard deduction, since they're a married couple, is $25,900, which takes away all of that income. So they have no taxable income, no tax, and with no withholding, they have no balance due or refund. However, if they each make about $22,000 a year, it changes. If they don't check that box, they'll have no withholding on either one of their salaries. And with the standard deduction of still the $25,900, they're going to have taxable income of that $18,100. And a 10% tax rate would be $1,810 of taxes that they will have to pay when they file that return because they had no withholding. Now, if they check the box with the same facts, that $1,810 worth of tax is going to be covered by their $1,820 of withholding, giving them a very small refund of the $10, but they won't owe anything. Melissa?
Thanks, Kathy. I appreciate those demonstrations of how important that little box can be. It is definitely easy to overlook it. Now we go to step 3, claiming dependents. We're only going to do this on one W-4 if there's more than one job, or fill that out for the highest paid job you have. Sometimes we see spouses that don't talk to each other about who has listed dependents, and I have to admit that my spouse and I have done this as well. And then both spouses list the dependents on the form, and it leads to not enough money being withheld. And so you only count each child one time total in all of the W-4s that get filled out for the return that we filed. So that's you and your spouse if you file jointly. The next step, we go to other adjustments. Subsection 1, that's where you can use that part of the form to let the IRS know that you're going to have other income that doesn't have withholding. Say, for example, that you have something like income from gambling winnings and there isn't going to be anything withheld to pay that tax that's going to be due. You can let the IRS know ahead of time that you're going to have that income, and then the withholding will be done over the course of the year so you can avoid the debt. Subsection B there, deductions, is this part of the form isn't used as commonly as it used to be. Most people, with the changes that have been made to the standard deduction, are taking the standard deduction as opposed to itemizing all of their deductions that they may have. If that's you and you use a standard deduction, you can just skip 4B and leave it blank. Otherwise, there's a worksheet as part of the instructions in the worksheet in the form that will allow you to figure out how much you should put in this field. Section C here, extra withholding. Sometimes you realize part of the way through the year that not enough money is being withheld and you want to add some extra on there so that you don't owe money at the end of the year. You can use this field to set aside extra money to your withholding. Say you realize halfway through the year that you would owe $1,000 in tax based on your current withholding. Count the number of pay periods that you have left and divide that $1,000 by the number of pay periods you have left so you can make smaller payments throughout the year and get caught up. It's much easier to make small adjustments early in the year rather than have to make big changes at the end. I will say also that if you're not properly withheld, you can also face, and you owe a large debt at the end of the year. There are some times where you get penalized specifically for just not having prepaid enough tax. So you may be watching us thinking, what about the exemptions? Where do I list them? This form looks different than anything I've ever seen. That's true. This form changed, the W-4 changed in about 2020. And if you've never seen it, you should talk to your employer about updating your withholding. The old form used a different process for trying to calculate how much withholding that you needed to have. And now it's based more on taking into account the child tax credit than dependency exemptions. The IRS has a tool that can walk you through this process. You gather up all of your pay stubs for all of your jobs and for spouses if you are married and file jointly. If you have any other income coming in, gather that information as well. The more information you have as you complete this calculation, the better your final number will be and the more reliable it will be. You provide all of the details for your situation and the calculator tells you how to fill out the W-4. It's a good idea to check your withholding sometime throughout the year or if your income changes. This way, you know what to expect at tax time. I've also seen some people say that their employer messed up and didn't withhold enough. As we've said before, usually that's the result of mistakes in filing out this form. Even if there is an error made by your employer, it's your job as a taxpayer to make sure that the withholding is getting done and that your taxes get paid at the end of the year. So even if it's their fault, you're the one that bears the penalties or interest that come when the taxes don't get paid. Look carefully at your pay stub. Make sure you won't have any nasty surprises at tax time. Sometimes people will fill out this form in order to reduce or avoid having taxes withheld. It's important to understand that this form doesn't affect how much tax you're eventually charged with. It only affects how much money is held out on your paycheck and how ready you are to pay that tax at tax time.
And there's some free filing resources that we can give you. If you go to irs.gov/free file, there's lots of different providers on there that have different requirements on how you can free file your tax return. You can also go through the VITA, which is the Volunteer Income Tax Assistance, TCE, which is Tax Counseling for the Elderly, and the AARP sites. Generally, these will be open from mid-January through mid-April. They will prepare taxes for you for free if your income is generally less than $60,000. Although the AARP sites might have higher limits for seniors. You'll want to call 211 from a 614 area code phone or 614-221-2255 and ask for a free tax appointment. Should you need past years done as well, they can generally go back 3 years. Just ask for a longer appointment and let them know that you need more than when you're done.
Great, thanks Kathy and thanks Melissa, and thanks to everyone for watching. And if you do have questions that we didn't answer, please leave a comment below and we'll answer what we can. Please keep in mind that you can view all our tax-related videos on our Facebook page. And you can also visit our websites www.columbuslegalaid.org/tax or www.souls.org/tax and click Visit Our Resource Center for some of those videos. And be sure to stay tuned for future segments when we'll talk about other topics for tax season. Thanks everyone for tuning in, and we'll see you next time.